So you guys used to love when I would do the company deep dives back in the day, and I wanted to bring them back for a couple of reasons. Number one, because I am actually looking for some long-term investments. Currently, right now, I only have two. I'll do a video on those. And I feel like the market overall is just overvalued. And as we talk a lot about long-term investing in trading on this channel, I feel like it's just a good idea to go through these companies and share it with you of what I'm looking for, why I'm looking for certain things, how I value a stock and or a company, and ultimately if I would invest in that company. So I figure it's just a great way for you guys to learn whether you want to take a position in one of these companies, or if you guys just want an objective opinion on how I price a stock. So we're going to be talking about Boeing. Boeing's the first one, and this for two reasons, right? Number one is going to be because they have earnings coming up pretty soon. I'm also going to do a Wells Fargo video because they have earnings tomorrow morning. I'm going to hopefully get this video out before it, both of them out before it. Now, the other reason I'm doing Boeing is because there was some massive unusual options activity that did come in on Boeing yesterday. So I am really intrigued to see how those options play out. Now I'll actually show you guys very quickly those options that came through yesterday on Boeing. And that were these 12/17, 2021. These came in for 1.6 million and then about another million. So that's very unusual, and I'm assuming that they're probably buying them into earnings that are coming up soon. So let's get into it, guys. Hit the like button, subscribe to this channel, hit the notification bell, and then also go ahead and check out my free Discord. I have a free Discord down below where you can hang out with our community. You can trade, you can see some long-term investments that we're doing. It's just a great community to be a part of. So let's take a look at Boeing. First thing I want to go through here is going to be kind of just a very basic breakdown of the company, what it does, some key metrics. We're going to be using Simply Wall Street. I like to use them or Morningstar, but Simply Wall Street I feel like just puts it together a little bit better from a user interface standpoint. And then we're going to go into some financials, and then from there we're going to talk about and address the 737 MAX issue, which has been basically plaguing this company for a while now. So for those of you who don't know what Boeing is, they, together with their subsidiaries, design, develop, manufacture, sell, service, and support commercial jetliners, military aircraft, satellites, missile defense, human spaceflight and launch systems, and services worldwide. So there's three main sectors. There's like the space sector, which is really the smallest at this point. There is the commercial jetliner, which is one that everybody thinks of, like the 737. And then there's also the military aspect, which has been doing very well for them. Now, one thing I want to preface this video by saying, and I will probably do this with every single video that I make, is that analyst upgrades, downgrades, their projections, they all have to be taken very, very lightly. Because at the end of the day, it's just all speculation. The only thing that is not speculation is the numbers, is the actual numbers, is the actual balance sheet, the actual income statement, the price to earnings. That's the numbers. So when you see like rewards, risk analysis, future projections, you have to take it with a grain of salt. So rewards trading at 30.8% below their estimate of its fair value. We will talk about that in a minute because I don't believe that the fair value is where they have it. Earnings are forecasted to grow at 35.71% per year. The risk analysis is debt is not well converted by operating cash flow. Shareholders have been diluted within the past year. I would also say another risk analysis is that they cut the dividend, which we're going to talk about as well. Some competitors for Boeing, Lockheed Martin, that's really the big one. These other companies definitely are a bit of a competitor to them, but really the biggest thing you could say is going to be Lockheed Martin in this history and performance. So I'll go over this more with this actual chart. So this is a 5-year weekly chart of Boeing. So obviously if you're a long-term investor, you don't really care about technical analysis and what's happening on a short-term time frame. But if you were to have bought Boeing today, 5 years ago, you would have made 86.32% return, which is a very good return. For those of you who might be like, yeah, well, it pushed up to $440. At one point, if you would have sold, you would have made nearly 263%. Yes, but think about it, when the S&P 500 is getting 9 to 10% per year, an 86% return in 5 years is really not that bad. So I know it's not what everyone wants to see, up in the hundreds, but still very good return. Now we can push past the news, price volatility. So obviously the volatility is going to be high. They said that the industry volatility is, average market volatility at this point, but you can see price volatility is extremely high, and you can see the volatility by just how much this thing has moved. Now, when you look at the 5-year price volatility, of course, there's a massive dump because of the Rona. That's going to be on any stock that you really look at on a 5-year time frame. But you can also see there's a lot of volatility within this area because during the past 5 years, we had the whole tariff situation happened, which caused a lot of volatility with this stock because it was a company that would be hit very hard by those. And then the other thing is obviously the Rona, the hitch travel, but the biggest thing is the 737 MAX issue. So of course, there's a lot of volatility with this company. Now, we talked about already about the company, the fundamental summary, the earnings and revenue. So they just reported on the 29th and they had an EPS of a loss of $15.05. So please realize that this company is not making money. This company is not profitable anymore. The next earnings is October the 26th. You can see that they have a valuation, which means that they think the company is undervalued by 30%. To them, their fair value is $327. Now, for me, any time that I'm looking at a company, I'm going to figure out what the fair value is. I will show you in a different video with an Excel spreadsheet how exactly I find fair value. Then you have to have a risk value baked in there. For some people, it's 20%. For some people, it's 30%. For me, it's 50%. So that means that if the fair value really is $327 to them, I need to be buying Boeing at least $150. That's half the price. That's going to just give me some room for my risk that if I buy the stock, it's 50% under fair value. I don't think fair value is 327. I think fair value is about 220, 230, where we actually are right now, maybe 250. And for me, in order to be buying this, we're going to talk about this later, I would really want it somewhere around $170, $160, which, buying it back at the Roni lows of like $96 is just would have been amazing. But we'll talk about this as we get further through. So they're saying it's trading very far below. You can see here as well that their price to earnings ratio is lower on their calculator, but it's because they're unprofitable, right? So their PE is not even in the positive. So the company is not profitable. Their price to earnings growth rate is very low. They have insufficient data because you can't project the growth rate when there is no profits. So PE growth rate is something important that we'll talk about when it gets to me actually figuring out what our price should be, what our fair value price is. And that's why it's like, I don't understand how they can have a $327 fair value price when the company's not profitable. But we'll talk about that in a little bit. Future growth, 35.7% forecasted annual earnings. So this is what their quote analysts, which remember, take it lightly, is expecting their growth to be in the next 1 to 3 years is 35%. I would probably cut that number in half just to be safe. Looking at a company from a fair value standpoint, or if you're trying to value a company, you have to understand that you need to be very, very generous with these numbers. You need to basically cut everything at least by 33%. If the number still makes sense with you cutting all of that to worst case scenario, then it's a very good investment. It's kind of like with real estate. When I'm looking at a duplex, I want to literally think worst case scenarios, what is those numbers? Does it make sense? If it does make sense, then that's great. If we look at past performance, we've already talked about that. Financial health, we've talked about that. Dividend. So as of right now, there is no dividend. At this moment, there are no dividends. They have cut the dividend at this point. Now, if we look at the actual financials here, this is their balance sheet. And one thing that I like to look for is total assets to total liability. So right now, our total assets are $93,333,000. And you can also see here that we have total liabilities of 91,921. So right here, this is a 1-1 ratio. That is not good. What I would like to see is like maybe 180 to 90 or 240 to 90. That's what I would like to see. I always want to see at least a 2-to-1 risk versus reward when it comes to total assets versus total liabilities, because they don't have to go and bring on a ton of debt if they, if a pandemic happens again, if they have to keep the 730, something happens again with the 737 Maxes and they have to completely shut down and not have any planes up in the air or no purchases happen for a year. Like, I want as much possible cash or as much possible total assets as I can relative to the amount of liabilities that we have as a company. So these are my notes from a article that was last done on investors.com. And what I did was I just kind of highlighted some of the most important parts. Basically, it was giving a bullish statement as to why they believe that Boeing is a buy. So some of the main things: despite turbulence over the past 2 years of Boeing seeing its 737 MAX orders grow, is Boeing stock a buy right now? Now, we're going to go through this, and these are the most recent purchases that have happened within the past 6 to 12 months. So, Alaska Airlines ALK ordered 12 Boeing 737 MAX jets on August 16th. That followed an order of 23 of narrow-body jets in December. Quote, these aircrafts are prudent long-term investments for our business, Nat Pfeiffer of Alaska Airlines said, in charge of leading their planning. The aerospace giant reported September 14th that it had 53 orders in August, including 35 gross 737 MAX orders. It also saw 30 orders that were canceled or converted. Now, Boeing delivered 22 aircrafts last month, including just 14 commercial passenger jets. Deliveries of its 787 Dreamliner remain halted over an inspection issue. February was the first month that orders topped their cancellations in more than just a year, and the momentum continued in March, April, May, and June, but the company is still coming out of a deep hole. Boeing is bullish on a long-term demand, especially from China. Its latest commercial market outlook released on September 23rd, Boeing sees China needing 8,700 new airplanes by 2040. And in 2019, it saw that China needing 8,090 aircrafts by 2039. So obviously, the demand from China is higher. And that's, they're expecting that all of the planes are going to be bought from Boeing, of course. Now, from a fundamental standpoint, the Dow Jones Giant reported Q2 earnings of 40 cents per share, up from a loss of $4.79 per share. So obviously that's good. The first profit since 2019. But what you have to understand is when we're looking at EPS earlier and PE ratios, we're looking at from a P ratio standpoint, is the company profitable for the year? So just because you have a profitable quarter doesn't mean, quote, that the company is profitable. So they did have their first profitable quarter in Q2. We're going to see Q3 coming out pretty soon, but they're not profitable overall for the year, so there is no PE yet. So analysts polled by FactSet saw a loss narrowing to 83 cents and revenue jumped 44% to 17 billion, also beating their expectations. So if they could put another quarter out like this or better in Q3, we could see a very good move in the next couple of months. The commercial backlog grew to 4,155 planes valued at $285 billion, up from over 4,000 airplanes valued at 283 in Q1 as their deliveries rolled in. So if you guys have been watching this whole situation with Boeing for the past couple of years, the backlog was like the biggest bullish thesis that everybody had, was that, okay, yes, we have these issues with the 737 MAXs, but the backlog is still worth X. And then it went down and then went down. But obviously with new purchase orders coming through, it is a better sign. United Airlines ordered 200 737 MAX jets in June. Southwest ordered 737 And Southwest Airlines, the top 737 customer, announced on June 8th that it would buy 34 737 MAX jets in 2022. The carrier now has 243 737 MAX aircrafts in order. Total says that it could need up to 500 new aircrafts as it expands its U.S. service. So that's the first part. It's very good that from a commercial standpoint that they're becoming, as a company, profitable again last quarter. We'll see how this quarter goes, and the fact that orders are still coming in. Now we're going to talk about the space and the defense sector. So the defense and space segments, while Boeing's commercial business faces some headwinds, obviously, defense business is starting to see positive trends thanks to foreign military sales. Australian Navy and Air Force ordered 11 P-8 maritime, surveillance aircrafts on April 1st. Germany became its 8th customer, ordering 5 P-5s in July. United Arab Emirates will receive a EA-18G Growler electronic warfare plane as part of its major U.S. arms deal after normalizing ties with Israel last year. The U.S. Air Force awarded Boeing a $2.1 billion contract on January 20th for 15 more tankers, with a total under contract now are about 94. Company recorded $275 million charge for the tanker in Q4 due to production inefficiencies, including impacts of the Rona distribution. So I can't say that word, obviously. Overall, the charges totaled $5 billion. Meanwhile, company space defense and business suffered a setback in December 20th of 2019 when its Starliner capsule failed to reach the proper orbit for docking the International Space Station over a software issue that could have destroyed the space capsule. capsule. Can't say that word. Boeing expected to redo the test flight on July 30th, but the test flight was delayed indefinitely as the company looks the cause of the technical issue, and obviously fix that. So Boeing's also facing continued delays with space launch system rockets, a key part of NASA's ambitious Artemis mission. So overall, seems like space starting to get a little bit better. I actually really don't know too much about what they're doing in the space segment. A lot of what I have been watching over the past 5-6 years, because I used to be a Boeing shareholder, is really military defense and obviously commercials. I sold my Boeing shares at like $390 a couple of years ago, so really not doing too bad there. Now, management says that is paying down its debts is a priority for them so that it can resume their payouts. So obviously, once they pay their debts, they want to start giving out dividends once again. They're considering a stock sale to help pay down debt accrued by 737 MAX grounding. So that is a little worrisome, because at the end of the day, if they go, well, not worrisome, but yes, as a long-term investor, you want them to pay down the debt as fast as they possibly can, so that this way they can become cash flow positive, that they can start to pay out dividends again. But the biggest thing is they get rid of the interest that's hanging over the company. But the issue is if they go ahead and offer stock, it's just going to dilute you as a shareholder, obviously. So problems with the Maneuvering Characteristics Augmented System, or MCAS, flight control software contributed to the Ethiopian air crash in March of 2019, as well as the October 2018 Lion Air crash. Combined deaths were 346. What expected to be a temporary blip, if you guys have not been paying attention to any of this, but what they thought was basically be a very quick fix. Now it's been down for basically past 20 months. FAA approved the jet's return to service November 18th of 2020, and European Union and Canadian regulators followed in 2021. So the grounding, suspension of deliveries, and production halt have been extremely costly, combining with charges booked last year. Now it has become a $20 billion issue that the company has had. So what they're saying is Boeing stock a buy. 737 MAXs are flying again, but demand for wide-body planes like that 737 MAX remains very weak. Approval for the COVID vaccine helped the stock, but earnings will likely remain under pressure for it, as well as the International Air Transport Association, a trade group that doesn't see air travel rebounding until 2024. So still 3 more years, basically, till demand gets back up to the 2019 levels. It's Boeing stock's consolidating after completing a round trip, remains under the key 200-day line. We'll talk about that in a minute. And to them, Boeing is not a buy. But then again, like I said, they're just analysts. But for me, what do I think about Boeing overall? This is also the 200-day SMA line that they're talking about, which from a technical standpoint is a very, very, very important level. So let's talk about some pros and some cons at this point, right? For me, I really liked Boeing before this mess. I liked that it was a very fundamentally strong company. I liked that the company, even though it was a plane company, it had a diversification between obviously like space, military defense, which was like the big backing, and then also commercial space flights. Since then, they've lost their old CEO. The new CEO has stepped up. They have spent $20 billion basically fixing the 737 MAX issue, which is only if something else doesn't end up happening. And they've accrued an insane amount of debt. And on top of that, too, they're not trading at an attractive price, and they are not cash flow positive, which is something that I really don't look for. Here's the thing. If I'm going to invest in a company that is not cash flow positive, it has to have massive potential upside. I'm talking about like I have to be able to make 1,000% return within the next 10 years. And there are some companies I believe that could do that. They are going to be very risky though. The thing for me is I don't think Boeing is at an attractive value at this point. So let's just say that by 2025, let's say 2025, Boeing can at least get back up to where it was before all of this happened. That's a 71 to 75% return. Let's just say best case scenario 5 years from now, it's up at 440. That's a 96% return. That's not bad, but for the amount of risk that I would have to bring on, I would really need Boeing to be down at like 140 again. So looking at this right now, I think fair value is about $200 to $220, which is where we're at now. So you're not getting a bad price when it comes to Boeing. If everything can recover, you should make at least 15 to 20% return per year. But it's not at an attractive price right now for me. I would need Boeing back down at 160 to 140 in order for me to enter this position personally. That's why I would need to enter this position at that price. So it's not a buy for me yet. It's not an attractive valuation. I think it's still not where I would need it to be in order to enter. But I do think that within the next 5 years, it will be worth about $300 to $450 as long as everything goes well. I don't think the company's going to go bankrupt. I don't think the company's going to go completely out of business. It's just for the amount of risk that I have to bring into my portfolio. It's just not, the juice is not worth the squeeze in that, because I also have to have opportunity costs in tying up that type of capital. So overall, Boeing does not get the seal of approval. Now, what about the upcoming earnings that we have, as well as this potential big money play that came in? Looking at this from a technical standpoint, from a trader, and then looking at the fundamental aspect that they did actually have their first profitable quarter last month or last quarter, I do think that they are going to beat earnings. I do think that the stock is going to take a significant move up in the next couple of weeks, and probably by the end of the year, I do think we will see Boeing probably around $260 to $280, which means that if you wanted to take this as a short-term trade, I do think Boeing will move up to 26, probably 26% up to $280. To be transparent, I do have shares in this right now in my trading portfolio, but I do not plan to buy this on my long-term portfolio, guys. Thanks for all the support. This video has been longer. It's about 21 minutes, but all of these are extremely important. So I want to give you guys an understanding of what I'm looking for and what I plan to do with Boeing, guys. You're a real one if you stayed until the end, guys. Thank you for all the support. If you want to learn how to trade, if you want to get access to every single trade and investment that I take live as soon as I take it, live stream with me and my team every single morning for the first hour of market open, get access to my 60-hour course library, as well as my private Discord server. You can use that and join the private mentorship group that we have for free your first 2 weeks. The link is down below, guys. Thanks for all the support. I'll see you guys next time. Peace.